Now, because stop losses are so important, I'm going to do another example. This time it's the United States dollar versus the CAD. Prices are coming down into a level of importance, and this level was highlighted on the daily. Prices are inside the level now, and it's always better to look for following structure after prices is hit, which means it's not a good idea to immediately take trades off that level, because then you are just a level trader. What we are looking for is some more structure. We're looking for clues inside a structure that's been made by the market maker. So you can call this another structure here. That's your resistance level, and then you have the barrier here as your support level. So as prices comes down into your area of importance, into your profit point, you start looking for some more structure. Let me zoom in on this each candlestick here, because this is quite important also. We have gravestone type candles here, and we have dojis. Now these are price action sort of trades. So what's happening here is indecision inside this area, and when there's indecision in an area where you have already highlighted a potential trade, and in this case you have highlighted a long trade, a buy trade, so you are not part of this indecision here. You have already decided beforehand, as soon as prices hit the level here on the left, you have already decided that you are looking for long opportunities, whereas these traders here have undecided. There is no decision. Prices is opened and closed at the same place. No concrete decision of whether to go long or short. So what we're looking for is some more price action in the area. And this one here, a hammerhead, this is typical for a price action trader to now start looking for buy trades. So they would put their buy stop orders here, or their buy orders, and they would have their stop losses all underneath this area here. The level traders here has their stops underneath this area. They were looking for the immediate trend change. Remember, if we look at what's happening here, prices has come down. So it's also from the daily, prices has come down into your level. So the level traders are looking for the trend change. They want to be first on board for the trend change. So when they see a candle such as this here, a hammerhead, then immediately they would start looking to buy. Unfortunately, we know exactly where their stops are, so we'd stop them out with some more indecision candles, dojis. Then the stops are probably all taken out by now. So at this time, we need to start looking very closely at what the RSI is doing. So we have lows on the price. Prices are making lows. RSI is doing the same, so there's no divergence at the moment. See, it's going down the same as price, so there is no divergence yet. Then we have a low being formed, and then here's our first clue, because we have a low on your price over here, and then prices are making lower lows, and the RSI is not doing the same. RSI is actually diverging at this point. So in this area, we could already start drawing our potential qualified W. Prices comes down, it makes your low, your midpoint of your W comes down, makes another low, and then up. So that is what we are looking for at the moment, is for the price to break through that midpoint here. So we would place our buy stop order here with our stop loss not below this structure, but the stop loss below a previous structure. So I'll show you that, but we first need to make sure that our RSI remains diverged before we are triggered in any sort of long or buying entry above this area. So let's watch the price again. We remain divergent on the RSI, even though prices are making lower lows even. Here we go. Prices are making lower lows now. The RSI is showing that we are still in a divergent state. So as long as this remains equal, as long as this remains the same, we can place our buy stop order there. Let's do that now. It's 3 pips or 3 to 10 pips above that area is where we want to place our buy stop order. So let's be prudent and place it up there. Okay, so now we have a qualified buy stop order. So it doesn't mean that it will be triggered, because as prices are coming down, we are not triggered, we're not losing anything. So there is no risk in this trade at the moment. Now I need to zoom out so that I can show you the correct way of placing the stop loss for this strategy. So this here is your current price action. What we need to do is look at this area, the previous area, for placing our stop losses. So for that, I'm going to need to just look at the terminal quickly and modify this order, because we don't have a stop loss in there yet. So I'm going to base my stop loss on this level here. So it's about 25 pips, 25 to 30 pips below that area is where we're looking at our stop losses. Yeah, so you can just calculate what the pip value is, and then at the same time make sure that our take profit is at least double your risk, the potential. It doesn't mean that that's where you're going to take the profit, but make sure that the potential profit is at least double. Otherwise the trade is not worth it in the first place. So when trades gets triggered, when your buy stop order gets triggered here, you can start moving your stop loss or and trailing your stop loss, locking in some profits, or we'll go in more detail about that later. But what I mean is your risk area. In this case, let's do the calculation. In this case, your risk area from your entry down there is about 50 pips. So I would not take my profit. It's 50, and you say multiply that by 1.25. That's the first place that I would really take my profit. So it's 62 pips away from my entry is where I would consider taking my first sort of profit. So that would be somewhere up here in this area. So it would be just above this blue line here. Let's just demarcate that area here quickly. So it's somewhere in that area where I would take my first sort of profits, and then only consider any sort of trailing or any sort of modification of the stop loss. So just to recap quickly, my trade is in this area, but my stop loss is based on a previous structure. So let me zoom in on this again, and let's see what actually happens here. As long as the RSI remains divergent, then that is still a valid entry. So let's see what happens to this trade. We are still divergent. Our entry is still there. And then here we get triggered in now. So we are triggered in a nice bullish bar. So everyone starts getting happy and starts taking their profits there. Look, all that type of thing is up to you. But I suggest, if you're going to follow this strategy and you're going to complete this course and link your accounts to my FX book, I suggest following the strategy, to its to the end, really. So you'd be saying, now you see, I should have taken my profits off on that area because now it's going against me. Let's keep this open for fun here at the bottom. So now we're in profit by $54 or whatever there, and thinking, oh, should we take our profits or not? You see, as your trade is already triggered, the way I usually do it is just to leave everything as is until my stop is hit or my target is hit. And that I found that to be the best way of doing these sorts of trades or using this strategy. So in this area here, I would start looking to actually take some profits off the table, because it's at least 1:1, and that 1.25:1. So you could start trailing or taking some of your profits off the table. It's very nerve-wracking watching that price action. I understand that. Here we start thinking, why didn't we take the profit again? Then eventually our target gets hit. But for interest sake, let's just see what happens eventually after. Yeah, it continues a bit further up. So you could hold on to another small position as price action goes up towards perhaps another target. But we'll talk about the risk in a later video. Focusing on stop losses. We've come to our chart again on the 15-minute, and it's a great looking level. We have 1, 2, and 3 touches, even more touches in between there. But let's call it that we have multiple touches here. So let's zoom into the chart, and prices are coming back up into the level of importance now, nearing a point of entry. We have our divergence. Prices are going higher highs there, and then the RSI is showing divergence. Then we'll put our entry in at this level, about 3 to 6 pips or 3 to 10 pips depending on volatility. So, but where do you put your stop loss? Do not be stingy on the stop losses, 30 pips or 25 pips or so. Let's do that. Let's say we put our stop loss at 25 pips up based on this highest high. Yeah, that's fine. So the thing is, you always need to look to the left to see if there is any potential higher high than this where you could place your stop loss at. So we could just zoom in a bit and we can see, okay, this is the highest point. So this is the most prudent area to put our stop losses. But then again, our entry would be here, just below that area, and that whole risk would be about 46 pips. So if you see a potential level where you would like to take profits, like maybe this level here at the bottom, because prices have struggled here before. So now you have two zones here. You have your risk zone and you have your profit zone. As long as your profit area, your profit zone is much bigger than your risk, then everything is cool. Let's calculate. If we enter the year, we would have a 49 pip risk for a potential profit of about 70 pips. So we don't know if this is going to make the 70 pips or if it's just going to stop you out. However, this is the way we would do the calculation for the stop loss. So let's see what would happen here. I'll put in an entry, a sell stop order, and then just modify the order, but let's put it up there. And stop loss would be somewhere up there. We could base our stop loss off of this high, which means we're looking for about say 25 pips stop, 25 pips from that point up. So somewhere up here, and then our target would be being more prudent, be using these areas of where prices were struggling before. So that could be our first entry. So the stop losses are calculated from the highest high up to this level, but always looking to the left and looking for higher highs and then calculating it from that point up. So whichever one is the highest high, you calculate the 25 pips or 30 pips up. Let's see what happens in this case. So immediately we get triggered. Prices are struggling at this point already. Prices are creating a level of support here. Still a little bit in profit at the moment. Hovering at our entry. So it's changed into the new day. Prices are in the Asian session there. This is typical for a stop hunting time period. So this could be even seen as a stop hunt to go long even. So we need to be very careful on this. And it looks as if we should have taken our profits already over here, but we would never have been able to guess this. So we did everything correctly. And then what we have here is another setup, because we have prices making highs and then higher highs. So we have a divergence here, and this entry looks as if it's exactly the same entry that we could use for this one as well. Let's just see what our stop loss could be. And that's about 25 pips up. 25 pips is good. Make sure that it's from the highest high. This one here is the highest high now. Say 25 pips from this level instead. That's assuming we're going to take the new trade. So I would actually move the stop loss even higher, 25 pips or so, or 30 pips above the highest high. So let's do that. So we need to modify our order. Have an open position there. Modify order. That's the stop loss that we want to move slightly up. This is because there's another setup here, and we see that there is a higher high here. And then I'm going to place another order under there because this is a valid setup as well. So the new stop loss, just sure that we don't get stopped out by that order. Pay for away from that high all the way. I would use about 30 pips, but that's fine. Let's see. We place another order underneath here. Here we have some structure, maybe even place it to be more prudent underneath that area. So we place another sell stop with a stop loss to modify this, and our take profit could be use the same level. Remember, we need to modify the stop loss up. Have a pending order. and we have one live order. So the new stop loss for this one, place. So now we have two orders in the market. And remember that we have a decent looking level here. So this, we have stop above this area, which could be hunted. So let's have a look. Down. We are not triggered in our trade yet. Not yet, not yet. And when we see a wick like this, and we are not triggered in yet, you could even move your entries further down. But in this case, we've just missed the wick. So let's see what happens. And it's a good thing that we are not triggered in. This is the reason for the 3 to 6 pips difference, so that we are not triggered in accidentally. And it looks as if there is a stop hunt. So if there's a stop hunt and something like this happens, you come down and you retest that level slightly, and it goes back up this, and then it's a good idea to put another order in. Actually, go down, see what happens. Here we even have another divergence in this area. We have like a double top happening there, and the RSI is showing a divergent pattern. So you could even put another order. So in this case, if I zoom in this case, the order should be about 3 to 6 pips below this level. But because we have a barrier here, we should put the order in here. So let's put another sell stop order in there. Remember, your risk parameters should always be adhered to. And for the beginner strategy, you only allowed to put 4 consecutive or 4 trades at the same time. So irrespective of what currency pair you're trading. So at one particular moment, you shouldn't be having more than 4 trades, and each of them should not be more than 0.5. So at any particular moment, you do not risk more than 2%. So what we have here is our entry. I said we don't put our entry there this time because we have this level. So this is 3 to 6 pips below, but we're going to put our entry below this level now. Then our stop needs to be above. It would need to be put above here now, 30 pips above that, because that's the highest point. You could even move your existing stops as well if you want, but I think it's going to be fine because we have your divergence here and everything. So let's have a look at what happens now. Prices triggers in the last trade and comes down, finally taking some small bits of profit there. So in this case, we are still fine. Still stop hunting in the Asian session there. Comes back against our first positions. Remember, as the trade is progressing, we don't know where price is going really. So it's just on a statistical basis what actually happens when you put a trade in with this method. And that's the reason I want you guys to link your accounts to my FX book, and we can together discuss your entries and your stops, and we can discuss your further development as a trader. So there we have our first profit taken on one of our positions. We still have 2 positions open. Many ways of managing this trade, this open trade, you could be trailing your stop loss or taking out some of the risk off the table, or closing the whole position, depending. It all depends on what you want to do. Here we have our second one, and I don't think we placed a target for this one, so just close that position. So you could close part of the position or the whole position. So in that case, we had 3 successful trades. It doesn't always happen this way, but the idea here is that our stops should be placed about a nice decent amount away from the highest high. So in this case, this would be our new high now. So we would look, if we had an entry later on, then we would consider this as our highest high to put our stop loss.